you have to see. I mean, the Trump trade, to what extent it really sort of expands the budget deficit. Right? If we look at the last time we had election, I think it was about 3%. Now we're closer to 6%. Budget deficit are very, very, very strong. So even in a sweep, right? The question is, do you go even higher from that? Because if you don't have a stimulative effect, and you're already so high. So you can also make the argument that even for the Trump rate, there is some limits. And but again, the important argument is, right, your inflation path that still falls. So why would the Fed not at least normalize? Right, it's still very, very restrictive. Why wouldn't they at least normalize that a little bit more and more on a sort of steady path, rather than looking month after month what the data, different labor market, etc. tells us, right? So I think smoothen it from a Fed's point of view, to smoothen it, right, and then see what happens after the election. And we will only know in January anyway, right? That's only really when the presidency would begin. What really happens in the meantime? You still have another 2 months. Why not stay on that path?
So it comes down to how good you are in terms of tuning out all this political noise. So do we ultimately have to reduce exposure heading into November the 5th? And just how defensive do we have to be, given the balance of risks out there?
I wouldn't say so. I wouldn't say it has to be purely defensive. I mean, as far as we're concerned, we say pretty much regardless of the election outcome, something like investment grade, for example, investment grade bonds is the sweet spot, right? Because from a fundamental point of view, economic point of view, rates should settle lower again from here. You can offset that if you bring the election angle in. I think very interestingly on the other side, maybe with an equity trade, for example, financials. Right? Financials, we think in any case is positive. Higher for longer, deregulation. You can make some arguments in a Trump win. So yeah, if you combine it well, you don't have to go all defensive in our view.
And you hedge everything with gold. You're calling 2850, right, which is 3.5%, almost 4% higher than where we are now.
Certainly, I mean, we have also from our clients I sometimes heard concerns. Yeah, what if Trump comes? What if Fed independency gets called into question? Certainly, that is a hedge for that. But I think much more mundane. Right? If we just look at the behavior of the central banks, especially EM central banks, and sort of attempts to probably diversify the currency reserves for obvious reasons, right? There is also a class emerging of relatively price insensitive buyers for gold. So you have actually a couple of angles beyond the election why gold is interesting.